Hey, what's up everyone? My name is Apur going and today I'll be teaching you how to trade the Forex markets. Well, I think it's best for us to get into it. Now, when we trade the Forex markets, we first have to look at a couple of things. It's called the top-down analysis, right? So if we're looking at prices within the week, then we start from the daily time frame. And then from the daily time frame, what we have to pick out, we have to pick out our highest highs, we have to pick out our lowest lows, which is going to be these areas right here. And we also have to pick out areas where our market has made significant changes, like here where the market came in, it bounced and then it shot towards the downside. Likewise over here where the market reached this area and established some sense of resistance. Now what you also need to know is that when you are willing to make an analysis that is on the weekend, you start from the weekly time frame. Why? Because there's a lot of market data that has been constructed as the week has progressed. Let me show you right here. Because everything seems to be a bit more compacted, right? So now as you see, everything is more compacted, which means that 1 week represents 7 days. So that's why you start from the weekly time frame if you're analyzing on a weekend, and if you're analyzing during the week, then you're gonna look at from your daily. Right, so hence we have said we have established our highest high, our lowest low, and we have seen places where our market has made significant changes. So now we continue with our top-down analysis. We go straight into the 4 hour. Now in the 4 hour, we have to notice the trend of the market. Which direction is the market trending in? Now, one thing that we need to remember is that the market moves in 3 different phases. It moves in an impulse, in a correction, and in an impulse that is equal to its previous impulse. Vice versa, if it moves upwards, it will move in an impulse, it will correct, and then it would move in an impulse. So we just need to remember that whenever it is that we trade the markets. Right, so let's get into it. So now what do we notice here when we trade EURNZD? We notice an impulse, a correction, an impulse, and then we notice a massive correction. Now one thing that we do know is that after we have established this correction, we're expecting another impulse towards the downside. So let us continue. Now one thing that we have to do right now is that we have to put in our trend lines. Now here's our trend lines right here. The price has rejected from all of these levels, as you can see for yourself. So now one thing that we also need to notice, this. We notice our first touch, our second touch, and we notice our third touch. Right, so now when we notice all of these things, our third touch is the most probable case that tells that the market is wanting to shoot towards the downside. Right, so now why do I say that this is going to be our first touch? Well, let me show you why. Do you notice what happened here? Market broke out, right? So when I say this is going to be our first touch, it's because the market first came in here, it bounced at this level of rejection, and then only then did it start creating our channel in which that we are now looking at when we talk about our current market data. So let us remove all of this and continue with our analysis. Right, so now that we have seen this, or automatically we do know that the market is going to want to shoot towards the downside from this particular angle. But now the question that we have to ask ourselves is, how is the market going to be shooting towards the downside? So now this is where we have to look further, look at the bigger picture. Right, so now when we look at the bigger picture, we have to zoom in towards the 1 hour time frame. Now in the 1 hour time frame, we also have to look at this thing called pattern analysis. Now we look for our patterns. What type of patterns do we see? What type of patterns do we have? And how do these patterns affect the way in which we analyze? So now that we have seen what we have seen there, we are now looking at price in this particular position. Let us remove this for now. We're going to replace that soon. So now what do we notice? We notice an impulse, and we have noticed our correction that's happening right over here. And then now we are expecting an impulse towards the downside, of course. So now how can we trade this? Right, so now we need to remember that this is a continuation pattern. Now continuation patterns move like this. touch 1, touch 2. We're going to come back here and create our third touch at this particular area right here, only for us to shoot towards the downside, towards this level here. So right now we can say that we can expect buys, and we can expect a buying market at this particular point, and that is exactly true. So now where do we buy here? Because we have seen a late entry, we were supposed to enter at this particular level. So where do we buy now? You're gonna go down to the 15-minute time frame, and in the 15-minute time frame you're gonna have to look for this thing that we call continuation patterns. Now continuation patterns will look like this. This is our price is shooting up, and then we're expecting something like this, and then we enter the market at this particular point all the way to the upside over here. So now when we come to this particular position here in the upside, then we're going to place our sell positions all the way to the downside, right? All the way to our downside, to our lowest low. But one thing that we have to remember is this. There is our first take profit. Now, why do we say this is our first take profit? The reason why we say this is going to be our first take profit is because this is where price first rejected. So the rule of price is that price will always come back to where it has rejected first. So now price is going to come here, create our first take profit, and then what we can expect is one of two things at this particular location. Is that we can expect price to play around, come back in, poke in here, create our retest, and then shoot back down, or we can expect price to just create a continuations pattern at this point and then just shoot down directly. So back to our analysis right there. So now looking at price over here, let us place this and then let us label it immediately as our first take profit. Right, so we have that labeled as our first take profit. So now we already know that price is going to come to this area right here. So what are we waiting for right now? What are we waiting for right now is that we are waiting for our correction, our correctional phase. So we zoom into the 5-minute time frame so that we get to see these corrections, because sometimes we're not as present in the 15-minute, because the 15-minute is condensed, right? It's a group of 3 5-minute time frames. So let us draw our levels right here. Price has rejected of these levels, and we can also see that price has found support in these particular levels. So this would be a good place for us to place our entries, our buy entries, all the way to the upside. So we will be taking this all the way up here. That's going to be our first take profit right here, and then immediately as prices reach that particular level, then we can place our sell positions from this particular point all the way to the downside, all the way down, gathering a nice 0.71%. But one thing that we also need to remember is this. Let's go back to the 1 hour. Is that the market moves in an impulse correction impulse. So what we expect is that we expect the market right now to move exactly as it has. So the moment price comes here, we expect price to keep shooting all the way to this particular level. So we can see that this can be our second take profit on the 1 hour. Excuse me. Our second take profit at this particular level right there. So this can be our second take profit, so we can extend this more all the way to the downside. So that is going to be our analysis for EURNZD. Now another thing that I want us to check is US30, because I've seen that many of you guys have been asking for the analysis for US30. Right, so again we do the exact same thing, that we start from the daily time frame. Now on the daily time frame, we have to establish our highest high and our lowest low of current market data. We don't have to go too much into previous market data, because that's just going to confuse us. So we just focus a lot more on what's happening at current. All right, so now that we have established what it is that has been happening here, we get to place this part here where price has found support in these particular levels, and price has also found support here, which also leads to this particular resistance part. Now let's remove this one for now. Let's remove this one so you can have a cleaner sheet. Remember guys, to trade the FX market, your charts have to be super clean, guys, super clean, so that you do not get confused about what it is that you're looking for. Okay, perfect. So one thing that we have to remember here is this particular point. Let us highlight this point right here. This is where market has rejected, right? So let us test what market has done in this previous level. Right, so market has moved in a way like this, where it has broken out of this particular significant area. It has broken out of our trend line. So one thing that we have to see is that price came here to reject at this particular level. So now it created a significant double bottom. You can think of this as a double bottom position. Why? Because price has touched in two places. It has touched here and it has touched there, creating a horn, like two bull horns. This is why we talk about, this is what we do in talk about Forex. We talk about two bull horns. So we talk about these two bull horns. Now, what do these two bull horns have in common? They have this thing, they have this level of resistance that is common between both of them, which means the price came to this level right here and it rejected towards the downside. So let us continue with our analysis, right? So that's what price did. So now it rejected these levels here, but wait a minute, what do we see? We see an impulse, right? After we saw this impulse, we saw a correction. And one thing that we do know is that an impulse is followed by correction, and immediately after a correction we get an impulse to the downside. So US30 is going to sell. That's a definite yes. US30 is indeed selling, and there is nothing anyone can do about it besides the market itself. So one thing that we can do is that we can go here and add to the significant area right here. Now we get our trend lines. What do our trend lines highlight? Our trend line highlights the resistant areas where price came and rejected. Price came here, it rejected once. Price came here, it rejected twice. Price came here, it rejected the third time. So now one thing that you also need to remember is that every single time there's always a resistance level, there's always a significant level of support. So now we look here. This is what we see on our 4-hour time frame. So we pull out our bars pattern so we can get a clearer picture of what's happening in the markets, and then we just plug it in right over there. It looks similar, very, very similar. So what we can do is that we can take this to heart and see that the market is indeed going to sell. Then we're going to go down to our 1 hour. Now in our 1 hour, we look for pattern confirmation, guys. We look for pattern confirmation. So what confirms that US30 is going to be selling? Right. Let us look at more research right here. Let's look at more research right here. This is good stuff, guys. This is good stuff. Let's note this particular level right here. This is going to be our first take profit. Why? This is going to be our first take profit, which many of the people out there will call it our 90% rule, where price will come here, and possibility is that price would want to look for a rejection. So price is going to come here and play around. Excuse me, this doesn't look good at all. Right, so price is going to come here at this level, and then it's going to play around like this, creating our famous falling wedge. Now remember that falling wedges deliver a rise in price. Falling wedges deliver a rise in price. So let us just have that, So now how do these falling wedges happen? They happen like this. Touch 1, price resists once. Touch 2, it supports twice, price resists the second time, and then price supports the third time. And then what happens? We will break out eventually. So the third touch is very probable, guys. Third touch is very, very probable. Is what's going to happen at this point, what we are expecting to happen at that particular point. So remember, guys, is that whenever you analyze the market, you have to tell yourself the story. Like, it's always facts, it's always figures. The market always moves in probabilities and possibility. There's a higher probability of the market doing this, but it's very possible that the market would do something like that. So now, one thing that we see here is that if market shoots back down, we're expecting a significant head and shoulder. We're expecting a significant double bottom, which means that price is going to come here and then shoot towards the upside. But that's not what we are looking for at current. What we are looking for is that we are looking for our confirmation that price is going to be selling all the way to the downside. So let us go all the way to the downside and notice this. Right, so now that we cannot see much of what it is that is happening here, we go down to our lower time frame. The 15-minute is the sweetest time frame ever. Now here, what we look for is that we look for our pattern. We look for our continuation pattern. Continuations pattern means that price will always move in the direction of its previous impulse. Let's have a look over here. Here we find our first touch, second touch, our third touch. Price came here. Right, beautiful. What do we see here again? Here we see something similar to what has happened before, right? With this nice, clean, beautiful rejection. Now remember one thing is that, let me prove this to you guys. You see price came here. What did price do? Price came here and shot back up. So now price wants to play around with us, guys, which means that price now wants to come here and there's a possibility that it wants to shoot back to the upside. But looking at our overall structure, what we do know is that price wants to shoot towards the downside. So let us just, stretch this out just a little bit more so we can see market clearly. Then now we move to our 15-minute time frame. Now in our 15-minute time frame, we look for a 5-minute time frame. Sorry, we look for something very similar. We see our first touch right here. We see our second touch right here. Now what's going to happen is that price is going to move like this. From here, price is going to go all the way up here, create our relevant third touch, and then shoot towards the downside. So now this is a place where we can say we can call in our sell positions. So let us do that. We can say right here, or fairly a bit closer, fairly a bit closer. We can say that, what, and keep our stop losses very tight, guys. And remember, stop losses, guys, it is what keeps you in the market for as long as possible, guys. Risk management is key. So now that we have noticed our direction, where we have noticed this beautiful impulse, this correction, and then now we're going to establish another impulse. So what do? We pull our bars pattern for more clarification. We take this, we pull it all the way up here. It makes sense, right? It does make sense. But for it to make a bit more sense, let us do it like this. Let us pull price from this market data, and then we go all the way here, right? If we join this part over here, it makes a lot of sense, guys. I know that you guys can see this because I'm looking at it, guys. I'm looking at it. It makes a lot of sense. Once you see it, you can't unsee it. That's what Mandela the code said, right? So we expect price to come towards this particular level here, and we need to remember that it's very probable that there's a possibility that price will not even come here. That price will just play around over here and then it will shoot towards the downside. So price, is a possibility that price will play around over here and then shoot towards the downside. Remember that always, that there's always a possibility and a probability within the market. So we are expecting this to sell on the long points in time. So now how long is this going to sell? We pull out our bars pattern. Our bars pattern will give us a thing called clarification. We pull it out, we bring it all the way up here to where price is currently. Doesn't that look beautiful? Doesn't that look gorgeous? So having this as our first take profit, we can actually have this level here as our first take profit. Now that we have seen the market a bit more clearly, first take profits, right? We're gonna have this right over here, and then we can say with these guys can be our secondary take profit, our second take profit, our second take profit right here. So now, having seen what the market is giving us, now we do know that US30 is gonna want to sell, come to this particular level here and look for a potential double bottom. Once it reaches this particular level, then we know that we will be taking more shots towards the upside to come back and test the significant area right here. Now let's just count. Let's just say that price does come to this level right here. Let us see how much in percentages that we could gain. We could gain a nice clean 1.10%. 1.10% is very beautiful in the market. That's a lot of money. That's a lot of money, guys. That's a lot of money, guys. That's why we say that the market is out here to give money. This is free money, guys. The market is here to give you money. But the thing is, what's going to stop you from receiving this money is your own mental state. How you look at the market and what you think when you look at the market is what's going to hinder you from making that paper. So guys, now that we have seen that, you can also continue and look at maybe our overall structure. On our overall structure, you can also pull up a bars pattern, and then we remember that the price moves in an impulse, correction, impulse. That price moves in an impulse, correction, impulse. So once price comes here, we can expect prices to shoot past this level all the way here, giving us a nice 1.4%. But because we are not greedy, what we're going to do is that we're going to take it at this particular level, and then once price comes to this particular level, here's what we're going to be expecting. When price does come to this level, we're going to expect a nice play around area over here, and then we're going to shoot down and then create another area to play around. And then once price comes here, we are expecting this very nice area. Let me just use this, this looks a bit more clear, right? Price will want to come here, create our, our thing, our pattern, our flag pattern, then come back here, maybe just start playing around because this is a significant level of resistance. And then possibility is the price would want to shoot up, or price would want to shoot downwards. So one thing that I'm going to tell you is that when price reaches this particular level, what I'll be looking for, an impulse towards the upside. I'm telling you guys this cleanly, I'll be looking for an impulse towards the upside. Why? Because I'm looking at this level right here, this key level right here, and I'm looking at this key level right here. So remember, when you trade the FX market, guys, you build your own story. No one's going to build the story for you because you are alone in that room, in that office, in that workstation, and you are grinding. This is your grind. So you should know that whenever it is that you want to trade the FX market, you build your story. Tell yourself, why should I believe what I'm doing right now? And if you see that there's a lot of evidence that points towards a particular direction, then go for it, guys. Anyway, this is our first YouTube channel, and I believe that you guys will enjoy this. And after enjoying this, please like, subscribe, and don't forget to share. Thank you very much. My name is EURNZD, and this is our analysis on the Forex market. Cheers. See you next time.